Hey trading friends, how are you? Tom Willard with Tom Willard Trading. Welcome to another video. Doing an update here. It's Memorial Day weekend, 2019. Let's get right to it. Let's start off with the market, major market ETFs that I follow. First off, the S&P 500 ETF, the SPY. That's Samuel Papa Yankee. And you'll see here I've got my typical four chart setup. Well, we got on the top left, we got the daily chart, weekly chart on the right, 60-minute chart on the lower left, and on the lower right we've got the 15-minute chart. So let's start here with the daily. You'll notice that we've had a lot of gaps lately. You can see if you've studied candlestick analysis, the red candles are when the close is lower than the open, and vice versa. And if it's a green, then obviously the close is higher than the open. And technically, in a very basic way, green candles are more quote unquote bullish, and red are more bearish. But in and of itself, one candle isn't going to tell you the whole picture. You got to look at the semblance of pictures on multiple time frames, which I have here, that kind of give you the overall picture. So let's go from top down. Let's start actually at the weekly chart here and to the right. You notice here on the weekly chart, actually I'll click here so we get a bigger weekly chart. You'll notice here we made a high here in around October of late September, October of last year, 2018. And then we had that pretty precipitous fall over until pretty much seizing right around Christmas. And then we turned around and just moved back up here relentlessly. Challenged this resistance area here. You know how we can look how we digested the resistance area here to the left. It took about 4 or 5 weeks, and then we moved up higher, and now we've basically retouched, and actually I think slightly went above the previous high set here in September, and now have retraced. Now, this retracement in the grand scheme of this move is very tame. This move, obviously, comparing this with this was quite a vicious move down, and an equally significant move back up. It's a V bottom, leaving not a lot of support, but you notice it kissed off the 200 period moving average here as it came down aggressively, and then moved right back up to these highs and is pulling back. So really, if the overall trend is up, which you can see the 200 period moving average is slanting upwards. You've got the 20 period here moving upwards and crossing over the 40. This pullback looks really viable. But if we look at the longer term, which I'm not going to pull up here right now, and we go off the fact that since for many years now, let's just put it that way, we've been going in an uptrend. This uptrend is getting tired. It's technically overdue for a pullback. Now, these pullbacks though are cleansing, meaning they do clear out a lot of people, and it can create the ability for this to go higher. So overall, I'm pretty bullish on things here. In general, there are ideas to short, obviously. Certain sectors are weaker than others, and some are showing some strength here. And I'm going to talk about these and share these with you here shortly. I just got done scanning for next week, and since we have an off day on Monday, I wanted to get this out Saturday so you guys have longer time to digest it. A lot of you shoot me emails with questions. Continue to do that if you want. I'll be around a little bit this weekend. In worst case, I'll get back to you in a few days starting next week, because a lot of the ideas I talk about here are swing trading, longer term trading ideas, not day trading, although I do day trading, but that would require me to do a daily video, which I'm not feeling like I want to do at this point in time. So we'll stick with the swings and longer term trades. So overall, we've come to the high. We made a higher high. We're pulling back here. Volume is high in the pullback, which is not ideal. Now, if we look to the daily chart, you'll notice all the gaps. So we gapped up here, closed higher, then we gapped down, way down, but closed way back higher, up near the open of the previous day. And you'll notice on the next day we gapped up but closed down. Then we gapped down, and then we put in a topping tail. Then we gapped down again, bottoming tail came back up. Gapped down yet again the next day. Here my hand, the hand is, went all the way down, came all the way back up and closed up higher. Then a gap down below everything and closed lower, only to gap back up. And I can continue, and you can see there's all sorts of gaps. Now all this messy crap gets digested in these long, taily, wide candles on the weekly chart, which actually look a hell of a lot more tame and tradable than this mess. So the takeaway from this, if you're swing trading, your major time frames are going to be your weekly, your daily, and your 60-minute chart. 60 for refined entries, daily is your kind of main bread and butter to get in and out, and weekly kind of confirmation. However, I'm finding the weekly charts are a lot more useful in regards to you can kind of x-ray your way down to get in on a tighter position here, but you'll notice because of the gappy nature and the slop and the up and down and the violation of previous days lows and highs and even pivots to the left, the lack of respect for those price points means they're not that important. Means that if you put your stop exactly at the bottom of a candle or exactly at the bottom of a pivot, you're gonna get shooken out oftentimes. Okay, so think outside the box. Some of the things I do is I look to possibly add to my position. Maybe I'll do a small scalp position, knowing that my stop on that piece is going to be a lot larger because I'm going to give it room. And if it comes down and hits what would have been my initial stop, I'll add to the position actually in that area, and then have an overall stop. Of course, keep in mind where my overall stop. You've got to have a stop and a line in the sand where that is, where you get out, no questions asked. Okay, so kind of some ideas there on the market. Overall, I think this is not a clean pattern here on the daily chart, but on the weekly chart, I'd like to see us settle in for another week or two, set up, and make a move higher. Obviously, with all the geopolitical crud going on, um, this could be a lot more like this. I mean, look at this, how messy it was here in the weekly chart from, in October, November, and December of last year. Really, really sloppy, and we can get more of that. This is pretty tame. Looks like crap on the daily chart, but it's pretty tame in relation to what transpired here, the tail end last quarter of 2018. All right, just to cover bases on the Qs, QQQ here, same thing, right? Made a high here, tail end of September, early October, came down, bottomed out end of December, came up. Not a whole lot of hiccups here. Didn't digest this resistance area here. Digested in a couple weeks and moved right on beyond it. Made a new high, pulling back off that new high, rising 20, crossed over the 40, 200 slanting up, uptrend intact. Got to lean long. Okay, in general. Now again, there's certain things to short. I've been shorting certain things and making great money on it. So you can go both ways. I enjoy going long and short, but you got to pick your spots. Obviously, you don't want to short stuff in an uptrend. You don't want to go long on stuff in a downtrend as a general rule of thumb, unless they're climactic. But those are going to be tricky. And people like try to be cute with stuff that's overextended to the upside with tons of volume, thinking there's no way this can go higher. Only if their rear ends handed to them as they keep trying to short it and get cut to pieces day in and day out, or week in and week out, whatever they're trading, whatever time frame they're trading. So overall here, Qs a little bit cleaner. You'll see very gappy here on the daily as well, but on the weekly chart, pretty clean pullback right to the rising. So we're looking for a hold here. I like this. I like it when it gaps down here and breaks a support point. Now again, it's holding this area and it tails out. Volume wasn't as high. Typically, I'd like to see a lot more higher volume. And oftentimes those pivot takeouts can be reversal points to go higher. Kind of like that K-toss. In fact, let's talk about K-toss. This is the one I did in the last video. And I'm still in this trade. If you've been following me on Twitter, I've mentioned taking profits. I took 2/3 out on this thing. I'm still holding a third of a position. I talked about it, buying it right here in this area when it dipped below. Notice how it broke. See how it broke the pivot points? It broke the support area. Okay, it came down. And then this volume day really indicated that this thing is probably going to go higher. And then it based. Okay, a couple days, popped up again on a little pop in volume, and then a longer base, and then a breakaway gap, and then it's just been moving like crazy. So fantastic trade, still showing strength. Really a lot of resiliency over the last, the market's been pulling back and this thing's been going higher. Really, I called the bottom in that pullback here. Notice here, rising 20, rising 40, rising 200 in this little area here, just touching between the 20 and 40 in that little area on the weekly chart, and then boom, it's off. Now it is extended. Do not be buying this now. Like I said, I've sold 2/3 of my position, but I'm still holding third, and what I'll look to do is buy 2/3 back, as I talked about on Twitter, if this thing retraces. Right now it's looking like 20 is a nice little support area. Originally when it was hanging out here at 20, when I sold my second third, okay, I was looking for a pullback to 19. I never got it, so I didn't buy back my third, but I'm still holding the third. It's still looking solid. K-toss, hopefully you got a piece of that action off my video from last time. All right, quickly just to revisit last time, and then we'll get on to new stuff. This old girl here, this LRAD, she, I've been talking about her for a while. This was born of a request. Someone, a previous student, had emailed me, looking for some advice. He was saying that I don't have a lot of capital. I can't be buying, Roku and Baidu and Baba and those. I can't afford them. Can you start throwing out cheaper stocks? So I started scouring the universe and I found this gem. And I I own this thing, a solid piece of this thing, and it is looking good. Look at the day it put in on Friday. biggest bar that I've seen in any recent past in one day. And in fact, if you go back even to these days here, this is the weekly chart, but I'm not going to go back. They're tiny bars. This is a massive bar on huge volume. Uh, this thing looks like it wants to go higher. And as I mentioned, when I talked about it most recently, looking for a break here over the 290 and then the 3 mark, and you can see that it pulled back here nicely. Volume dried up and then just exploded. First target on this thing is this 358, 360 high that was put in right here toward, what was it, July, August of 2018 is your first target. So in all intents and purposes, it's pretty close to getting there. I think this thing goes higher. Once it passes this resistance point, it's got nothing to stop it from going higher. It is a cheap stock. It's very thin. It doesn't trade a lot of volume. This was a massive volume day, and it did 363,000 shares. So it's thin, and as I've mentioned multiple times, trade to your own plan. It's your own risk. This is something that on a very overall level, I'll tell you, I would suggest not buying a ton of this, even though it's cheap, because it is so thin, and you can get caught in stuff like this. As it can be dangerous. So definitely much more speculative, but holy crap, does this thing look good, strong, and higher. And like I said, I'm in it and riding her. We'll see how far she goes. I'm going to look to get, once it gets past this resistance point, taking some profits, a little bit of profits, but holding the lion's share of it, because I think this thing goes higher. I think it's got some moxie behind it to get going. But before I leave it, this obviously is not a time to buy it. It's way too extended. You'd be crazy. In fact, you'll be buying it, some shares from me if this thing gets up a little higher here, because I'll be selling them. Okay, so now is not the time to buy it. When I talked about it in the last several videos, would have been the time to buy it. But even then, you can see how even sloppy it is on the weekly chart. And again, I put that thing out there about volume thin. So again, not for everybody, but for the guy that contacted me that was interested with the lower, cheaper stock, hopefully he got a piece of this action. All right, so now let's talk about a couple new ideas. Wheat and precious metals. This one's a very nice pullback. We've got it came down, it double bottomed, gave a little handle here, exploded higher. I actually rode this thing up, took profits, pulled back, took the last piece of my profits completely out of this thing, pulling it back now, setting up here again. Support area to the left, rising moving averages, 200 crossing over here as well. New highs pulling off of. I like this over here, okay? Buying it, pretty much over this 2075 area, on the weekly chart, 2075 to 21 area here, stopping it underneath these flat moving averages or the bottom of these candles, or this support area here, which would put you at 18 and change. General, okay, again, follow your plan on how you want to do this, but I'm scoping out good old WPM here for a move to get back in long and ride this thing higher. Another thin one, cheap one that I'm watching is this solar window. Very nice pop here on volume. You'll notice it's making higher lows here on the weekly chart. It's flagging. It's a very elongated flag here, and you notice how it's just peaked below the support on these two candles here put in, or these two lows. It just peaked below it. Hasn't followed through yet. Obviously not at a point where you should be buying it here yet, but if it can break above this flag, so I think 320 is the top, see where the bottom is, when and if it does that, I think this thing looks like it's wanting to change trend. It did just recently cross over the flat 200 though, so right now there could be definitely more downside on this thing. And again, don't think, well, it's only $2. How much more downside could there be? Well, you could lose 100% of your money. So think of it that way. It doesn't matter that it's $2. From going 2 to 0, if it goes from 3,000 to 0, it's still going to 0. So this thing could go to 0. But I like the flagging action here. It's definitely more speculative. But do not jump in early would be my suggestion. You could try to take it if it breaks the high of this candle here, $3. If you want to front run the 320, stop below. But I like this as to keep on your list to watch for a long. Celgene I've talked about over the last several videos. This thing came up to the highs, basing along, broke out, and it's holding the breakout now. It hasn't pulled back, it hasn't taken out the lows of this area here, which is the support right around $93-ish a share. Watching this, it hasn't followed through on the breakout, which is a little bit of a concern. So if you took it, you know where your stop is, whether it's below here, if you want to give it some room at 92 with the gap, or even below that. but I'm watching this to add to the position if it can break back above these highs for a breakout higher. Okay, and moving toward this flat 200 around $105 a share. Celgene definitely on watch. Cannabis is the rage. Well, one of the rages right now. This ACB, I like what I'm seeing here in general. It's giving you the cup. It's giving you a handle. Volumes lower on the weekly chart, crossing moving averages, shorter time frame over the longer with the 200 curling up. It's pulling back, kind of a little bit of a flag handle showing up. It's a pretty long one. Can you consider it topped out here? When was that? Around in mid-March, and it is now mid-May, late May. So it's been sitting here for a while digesting. And it broke below these pivot points here, support. So the key thing is, can it hold the low of this candle here at around $7.90 a share? If it can and sets up, I like it over 9 with the stop under these lows on the ACB. Definitely worth watching. CGC is another one. Canopy growth. You see very similar, kind of cup with a handle, broke out here to a high, now pulling back yet again. So watching this one as well. It's a little bit more expensive than the other. Definitely does ample volume, 2.2 million last on this Friday, and you can see it was a lower day than typical. So we've got plenty of liquidity. I like this. I like what I've seen. It looks constructive here on the weekly chart. Watch this as along. Ray, I want to talk about this one. I'm no longer in this one. I was in this and wrote it up and sold, took profits beautifully. It sat here and went around, and then when it took out the lows, I got stopped out of the freaking thing. Okay, and this is a perfect example. So this is a good lesson. I got stopped out. I didn't get a chance to get back in, and then when it gapped up here on this day, I don't think I was trading because I didn't notice this, or it wasn't on my radars anywhere, and the thing just broke out and is going higher. So at this point, again, being a disciplined trader, I'm not going to chase it. Don't ever chase. Please don't be desperate. It's an unattractive quality. Sit back, wait, let's see if it sets up again. So I'm looking to set up, get back in this thing. But I mean, I'm going to share with you guys. I got stopped out here at the low. I got taken out of the low. But I mean, profitable. Obviously, I'm in down here, so I was profitable on all shares, taking profits into here. But my last piece, I got stopped out and wasn't able to get on. So this stuff happens to guys like me too. Okay, I know a lot of people. I knew when I started out trading, it's like, oh man, all the bad crap only happened to me. Well, no, it doesn't. It happens to everybody. Everyone who does this long enough, you'll have crazy stuff happen to you, and you just gotta shake it off and move on and learn from it. Take away from it. Say, hey, this happened for a good reason. How am I going to use this to make me a better trader? So this is a perfect example where it just took out my stop, and I just didn't have enough cushion in there. Got took out. Now again, what is enough cushion? You never know. And sometimes you can give. I've had this happen before, and I'm sure you guys can relate. Where you give it. Say you have a stop that's at I don't know, $36. And you say, okay, I'm going to give it 50 cents of cushion. You put your stop at 35.50, and literally, I'm sure that most of you will say you've been in a position where it came down, took out 35.50 to the penny, turned around, then ripped higher, and then you're extremely pissed because you gave it cushion, and it happened to take your cushion, every single penny of your cushion out, and then went higher. So you can't browbeat yourself over stuff. The stuff will happen, you know. And I've had situations where I put my stop at 34.40. And it came down and took out all my cushion, but it held my stop. My cushion was just big enough by a couple pennies, and it saved my butt from staying and kept me in the position, and I reaped the benefits of the move higher. So it doesn't always not work out, but we tend to emblazon in our memories the times it doesn't work out, and of course then it becomes a self-fulfilling prophecy. So that's why the psychology part of the trading, to me, is 95% of it. You know, it's the part of the iceberg that's under the water. It's the major part of the success of this game, and that's just a small piece of it. All right, lastly, I want to talk about home builders. I don't have any home building stocks. I used to own this DHI on and off, and Lennar and a few others, but I haven't been in this in a while. And what I'm seeing here on the weekly chart is a constructive setup. You got curly moving average, smaller term, rolling over the longer term. You got the 200 moving up. You got an equal high. You got a pullback. You'll notice the same cup with handle type setup. Sloppy on the weekly, no doubt. But this looks constructive. This looks like, you know, it wants to go higher. Now, I know there's talks of a possible rate cut later this year and all that stuff. And again, you can, go over these things in your mind over and over again and really just make yourself have sleepless nights wondering about all the possibilities. I choose to just let the charts talk to me. And this chart's telling me that this particular home builder looks like it wants to go higher. Watch it as a long. Lennar, You'll notice it's not quite as bullish, right? It's more of a flat pan base, but you got a handle forming here over 55. Toll Brothers. Now notice Toll is definitely less constructive. This is the weakest of these three, in my opinion, and I don't have an interest. So if I'm going to play the sector, it'll be DHI, Lennar. Let's take a look at KB Home. Just top out on the big ones. KB Home looks the strongest out of the three right now. It's not really handling as much on the weekly as DHI and Lennar. So this is another one I'd be watching. KB Homes is a possible long, although I don't see a clean, crisp pattern here. Technically, the breakout was around 26, so at this point you're going to be paying up a buck. You got to pull back here on the daily, so you could 27 in, stop 26, 25 in that area. But you'll see there's a lot of herk and jerk and chop and slop. Reward to risk might be hard if you give it a $2 stop, and you got to try to pull $6 on this thing. Sit back, relax, and enjoy the multi-month move. It'll probably require for it to go that far. But it's definitely worth watching strong. Like I said, some constructive setups happening there in the home builders and Home Depot too. You've got something here where it hasn't quite gone up to make the high, and it's pulling back here a little bit steeper than I prefer. But you notice gap down, green candle, gap down, green candle, gap down yet again, red candle, but it's sandwiched in with another gap down and a green candled. I'm saying green candled out, and then we got a gap up. This is constructive. Okay, it looks like it wants to move higher. You got actually a pretty clean pullback and setup where you could buy 194, 195, stop 180, whatever, 186. It's a pretty big stop. Say just round it to $10 stop if you give it cushion on both sides of the aisle. And you're looking at $15 to the previous high, it's not worth it. I mean, these are some wide candles. So see if it settles in. Do a small scalp position, whatever you want to do. But Home Depot also looks pretty constructive. You got a curling over here. You got the 200 still moving up. You've got basically an overall cup with handle here. Stop here, stop here. On your previous pivot, it would be your kind of lines in the sand. So, all right, guys. Hope you found this video useful. As always, thanks for the watch. Give me the thumbs up if you like it. Hit me up with comments on the video if you like, or shoot me an email, tom@tomwillardtrading.com. Trade well. Have a great holiday weekend, and we'll see you next time.